Hi, good evening. Welcome to Wealthmills Securities Weekly Market Wrap. What a phenomenal week we witnessed. The week was very extremely volatile in stock markets. It's not only in Indian markets but across the globe. The Dow witnessed a big volatility. It was up and down during last week after 23rd March recovery. The main reason for the US markets to witness such recovery as well as such volatility, there was some concerns of the second wave of COVID cases may go up in the certain states in US and also in India, as the numbers of COVID are not getting controlled. Day by day the numbers have been going up. We already reached 3 lakhs positive cases in India. This caused the heightened volatility in equity markets. While coming to US markets, one is there may be a possibility of second wave of COVID cases, and also during last week the FOMC, Federal Reserve Monetary Committee meeting, the commentary that came from FOMC, the Federal Reserve Governor, stating that the zero interest rates are going to prevail for certain time, and also the commentary that came from the FOMC governor about the growth prospects of United States disappointed, and it given some questions to the market. But post that, there was some news that US might be ready if at all any growth prospects looks murky. There one more package of a stimulus package for US markets. So once the US markets got recovered, Indian markets also on Friday it witnessed a extremely volatile day. Market was in the morning, it was down nearly, the Sensex was down by nearly around 1400 points, but in the end of the day the stock market in India closed in a positive zone, and on Friday evening US markets also closed in a positive zone. So altogether it was an extremely volatile week in India as well as US markets. For India, if you are tracking Indian markets, we are currently following blindly the global cues. Indians especially, we are just going to sleep watching Dow and waking up watching Asian markets, and in the afternoon European markets and Dow futures. This is the current lifestyle of Indian traders especially. I would like to discuss with you all what is the strategy of the investors to follow during these very volatile times. As we witnessed a tremendous recovery for many stocks from the low of 23rd May to till date, US markets were up by nearly 45%, and currently the tech stocks in US, the Nasdaq, is trading in a positive territory. Whereas in India, most of the stocks, even across the broader spectrum, the stocks have recovered after touching low. They have recovered a positive recovery in many of the stocks. If you are an investor who entered the stocks during the March lows and you are sitting at a profit, what you need to do is it's better advisable to take some profits from the table if you entered the stocks for that quantity during these lockdown and pandemic times, because when a stock up by in a straight line 40-50%, there might be some amount of profit booking that might hit. If you are sitting on a stock which is fundamentally strong and it's not a traded stock, and if you want to hold on for longer term, don't worry. If there is any dip that market gives the opportunity, try to accumulate that stock during any fall that if market witnesses in the coming days. Altogether the volatility is going to prevail. The one thing certain in market is that is uncertain nature of the market. For the Indian macros are concerned, still the macros are a very concerning area for Indian markets, and the Q1 results that are going to come for Indian markets, and also it's going to be very disappointing. But just remember, market always sends the forward earnings of the companies. Probably we are sitting on currently in the Q1 of 2020, but market might trying to discount 2021 earnings, and what the observing across the globe and the analysis that is coming across the globe, there is a pent up demand that is coming across the industries. So how far Indian economy is going to witness a pent up demand after this complete clearance of lockdown? But if you ask, the COVID numbers haven't come into control, they are still rising in India. This is one more concern area in India. As an investor, we need to be very vigilant at this point of time, tracking our portfolios and any dip in the markets, because in March people thought it was the end of the world, but the markets have time and again shown Indian markets are resilient and resurgent markets. As I always share investment themes to all of our investors. As you all aware, every week at Wealthmills Security we share about different investment themes for all of our investors. On 26th October 2016, at Wealthmills Securities, on our blog, Wealthmills blog, we shared about the debt concerns of companies and corporates during that time. In 2016, the debt was not a topic at all, and we highlighted about the debt concerns of different various corporates in India. Today, after 4 years, currently that was the trending story as on date. Many corporates are referred to IBC, that is Insolvency Bankruptcy Code, and they are referred through NCLT, National Company Law Tribunal. I would like to tell you, after the new IBC norms, any company which is unable to solve their debt, they can be referred to IBC and can be brought to IBC proceedings. There are many corporates in India. There were 12 IBC cases in India. One, Alok Industries, you can see on the screen, ABG Shipyard, Bhushan Steel. So these are the 12 companies which were referred to under IBC. Among these, the first and foremost company is Alok Industries. How currently, first and foremost, I want to tell you how this IBC proceedings that happens for a stock that is listed on stock exchanges. Any company which is referred under insolvency bankruptcy proceedings, any company that comes under IBC code which is listed on stock exchanges is referred as a IRP proceedings company, whereas the lenders of the company, because the company is not able to solve the debt, the company can be acquired by any of the investor, and the lenders sometimes can go a complete haircut of the whatever be the book they lend to that particular company. There is a company by name Alok Industries which is listed on stock exchanges in 1993, and during the expansion phase of past 10 years, the company debt mounted to 30,000 crores, and due to the cyclicality and the nature of the textile industry, the company was not able to solve its debt. So the State Bank of India, which was one of the main consortium led bank, it brought down Alok Industries under IBC code. So because of these proceedings, the lenders of Alok Industries, they went from 30,000 crores, they taken 83% haircut. And also when a company get referred to IBC, because nowadays everyone were running to buy any company that is getting into IBC. But friends, just wait for a minute and try to understand how the IBC proceedings takes place. When a debtor takes such a big hit, the equity shareholders may lose their 100% of their equity also. So most of the cases it happened, the lender takes such a big hit on their loan book, at same point of time the equity shareholders also can lose their capital. But in IBC proceedings, what investor need to do is, once the IBC proceedings get over, the new consortium will bring the equity into this company. So post the capital restructuring, there will be a complete new entity and new paid up capital, and their debt get restructured in under IBC proceedings. So in the case of Alok Industries, the lenders led by State Bank of India, they got a hit of 83%, whereas the new investors into this company, the first and foremost is Reliance Industries, who infused 500 crores and they acquired 37% equity into this company. They infused 250 crores as equity capital and 250 crores as optionally converted preferential shares at 9%. So altogether they infused 500 crores, and also Reliance Industries, through its guarantee, the banks led by State Bank of India consortium, IndusInd Bank, they infused nearly 4,550 crores. So with 5,000 crores equity and debt, their capital got restructured. With newly constructed capital restructuring, Alok Textiles, and as per the disclosure of stock exchanges, right now, as per the new capital restructuring plan, the existing equity shareholders lost more than 90% in the company. As the new capital infusers, as per the new shareholding pattern disclosed in the exchanges, Reliance Industries acquired 30% in this company and become one of the prominent shareholders in this company. There is also a JM Financial ARC, Asset Reconstruction Company, also infused into this company. So with the comfort of Reliance Industries infusing the new capital into this company, the eyes of the market went onto Alok Textiles currently. And also there are some, normally in a IBC process, there are some promoters acquires the new company, they restructures the capital of that company, but after restructuring, the existing equity holders, they may lose 90% of their equity. And also post restructuring, there is a probability the new acquirer of the company may delist the share also. It happened process, and it happened in the case of Electro Steel, whereas it was acquired by Anil Agarwal led Vedanta. After the new capital restructuring, the company got delisted and almost all the equity shareholders, they lost their money. But in the case of Alok Textiles, two minority shareholders, retail shareholders, went into the court of law and they brought a case and they brought a judgment that the new acquirer cannot delist the company for a period of 5 years, which given greater comfort to the existing shareholders and the investors who invested after the new capital restructuring plan. This is the theme led this stock to rise humongously. Right now, this is the trending story. We will be watching this trending story. We will update you how the market is treating this entire story, because I want to bring you what's happening, the trending stories on stock markets. Please take a note. This is not a stock recommendation. This is the theme, that's the trending theme that's happening in the markets, and I want all our investors at Wealthmills Securities to aware what are the emerging themes that are happening in stock market. As the most renowned investor quotes, the Benjamin Graham quotes, investing is not about beating others at their game, it's about controlling yourself at your own game. As Benjamin Franklin says, it is all about controlling your game. There will be certain themes that emerges, and some stocks may trend in the market, but we need to decide where our position to be. And also these thematic stories or these themes are high risky, so check your risk. There might be a probability these kind of themes can or backfire in a different way. So I just want to bring to your notice and caution our investors and educate our investors about these kind of themes. So it is all about position ourselves where our investment thesis to be. This is all about I have for this week. Please do take care about your health. Thank you. God bless you.